morning. Let's take a look at the levels with Mr. Kevin Green. Obviously, there was a lot of technical damage on the way here, KG. So what point do we start to get impressed? What kind of looks like it should be sort of a routine reset style of bounce?
Yeah, I mean, if I told you that we're at the same levels that we were at, an hour into the close yesterday, you would probably say, okay, well, this is definitely going to be a level. And it is. If you're kind of looking at the intraday chart here, you're kind of looking at 56.35 as your first area of resistance for this market that it wants to actually try to break through. And you want to be able to have a closing candle above it. Going higher, 56.60 intermediate area of resistance potentially here. And then looking to the upside, 57.20, maybe a potential reclaim or test of the 200-day moving average, which is sitting at around 57.35. To the downside, if we do actually break and we get this selling event, which a lot of these pops that we've seen pretty much throughout this whole downturn, we've had pops in the market and then we've had individuals selling into strength. That's usually what you want to do, especially if you're kind of underwater on positions and you might see a little bit of profitability. If we do see a little bit of a reversal to the downside, I'm looking at 54.90, pretty much 5,500 to be your area, your negative gamma area for today. So if you're talking about progress, we got one step ahead here, trying to break above that 56.35 level. You want to close above that on this candle, see a follow through on the next candle. It would not be surprising if we do see a 15 to 20 point pullback here, test the 20 period moving average on the 15, and then kind of moving higher, come back, retest. So overall, this actually looks like some pretty decent strength, but we have a very long way to go. And like we kind of talked about on Monday and on Tuesday, today was going to be that bull day if you're going to get a print to be able to do so. And I think that's kind of that follow through reaction that we are seeing right now. We just need some more buyers, some more positive news to really try to take us higher here. I would consider this a counter trend bounce, not a firm bounce, a firm bottom in this whole downtrend yet. That can't be confirmed for another couple of trading sessions. Actually, probably another week or 2 weeks, actually.
Man, I like the intraday chart here. I really feel that there's so much within close reach that if bulls have anything, then we should be looking for them to try that 200-day moving average. Such an important level that was lost. So to come back there, in my mind, makes a lot of sense. Especially when it looks like there's a lot of positioning in your analysis from the options stuff there, then that makes for a pretty clear next battleground. The other thing, too, to your point about yesterday's high, the fact that we're kind of starting right out there, I think is encouraging as well, basically, to go kind of straight to yesterday's intraday high and begin there without severe rejection. There's a little chop, but there's definitely no rejection so far. We're hanging in there. Apple might flip positive right now.
Yeah, that might be the case. Once again, do we see selling into strength? And if you're kind of looking under the hood, you are. Already, right? We've already lost two sectors. Now they could be defensive sectors. You can make that case, right? If you're kind of looking at sectors like Staples Healthcare, they were higher. Now we actually just lost utilities, and we're losing materials. So at the end of the day, is it risk on? Yeah, I mean, if it's risk on sentiment, now obviously you want to see information technology and consumer discretionary, but I'd like to see a broader base for a stable recovery. But once again, beggars can't be choosers.
Yeah, give me some tech, baby. I'll take NVIDIA over. Oh, you could drop 2-3 sectors if you give me NVIDIA up 6.5%. Hey, drop another one.
Yeah, okay. We'll see, right? It kind of depends on the sectors here. And NVIDIA is actually making a really strong move to the upside this morning here. I would have expected that vol would drop a little bit more aggressively. We're still sitting at 25.2. So
that's a good observation,
Yeah, you're looking at around a 1.8% implied move on a daily basis. And honestly, we've been having more realized vol than what volatility is implying right now. But the backwardation is actually coming off here a little bit. So that's a bright sign for the bulls here. There's people that were freaking out about rates kind of moving lower after the initial print here. I think that's just kind of a little bit of rates moving higher, in my opinion, is kind of maybe backing out maybe some of the risk off tone that was in the market, and also the dollar itself, right? The dollar continues to move with equities, and so until that trend breaks, you kind of have to follow that too.
100% agreed. And the other Kevin and I were talking about this morning, so I like that you're chiming in because that's a really important one here to not panic to see yields up, dollar up. I think that is what you want right now. Okay, but let's play the other card then. I mean, because I am thinking that a lot of this looks good, but I'm also thinking that like there isn't much of an option. To your point on VIX, this stair step is like, if we don't rally, if we don't find some support in markets, if this doesn't work today, if this window of opportunity is not seized on by bulls, then it seems like we are in a very, very, very rough place that we didn't really expect to be to some extent.
Yeah, but if we kind of go back and let's say we do fail here.
Yeah,
right.
That's what I want to know. What happens?
All right. So let's see if we do fail. If you kind of close above 55.50, you start having a pretty much a 3-day consolidation. Right. What you don't really want to have happen is you break below 55, let's say 55.20 to the downside. That's where it gets a little bit, scarier. But if you can say that you have at least a consolidation for 3 days, a very wide consolidation range, if you're kind of looking at the numbers, I mean, you're looking at, for the most part, 100 point consolidation range. But let's say if that does actually take place, that also can signify that bears don't really have enough strength to really break you to the downside. The trend is to the downside still, right? We have to be mindful of that. And once again, I kind of go back, you fade into strength. If you're a trader right now and you really were anticipating a nice little pop for this morning, if I'm a trader, I'm fading this if I'm long calls right now, or if I'm long even the S&P futures right now, or if I had equity options in some of those high beta or those tech names, you need some strength here. So I say a consolidation still would be kind of a win for now, at least giving us a little bit of strength, and we kind of contain within this channel that we have on the daily chart here. So that's how I kind of really would look at it. I wouldn't get too concerned until you actually break through about 55.20. And if we break below 5,500, that's when you have a little bit of a problem. You get closer to a 4 handle on the S&P 500 than a 6 handle on the S&P 500. That's where it gets a little bit more concerning here. But I'm looking for a counter trend. Hopefully this actually can hold. I would hope for a counter trend rally. Even if you're a short in this market, you would actually probably want to see a little bit of a bounce to give you better price action.
That's kind of why I'm thinking there may not be quite as much. I mean, we'll see. We're up 7% Nvidia right now. Stock's up 1%. To your point, it looks like there's some magnetism on that intraday chart for the dealer options level, aligning with the 200-day moving average. We'll see if we can get there. I mean, I think 58, even revisit the old election level, which was such a key level, if bulls can really make a stand. All right, let's not jinx it. We'll talk soon. Thanks, KG. Appreciate it.